Okay everyone, welcome to tonight's webinar. Tonight's webinar is going to be a bit different to usual. We're not going to have any time for a question and answer session. I think let's leave the questions to our account managers this evening and tomorrow morning. I just want to get through the basic concept of the non-farm payroll report with you guys, and then any questions you might have you can save for your account managers tomorrow or myself. Okay, so let's get cracking here. Non-farm payroll, NFP, what I'm going to cover today is what actually the non-farm payroll report represents, the impact that the non-farm payroll has on the market, and why trade the NFP in the first place. So these are the three main points I'm going to cover. First of all, in simple terms, the non-farm payroll measures the number of employed individuals in the US with exception to the farming sector, government, and non-profit organizations. Hence the name non-farm. So it covers all employment areas except for these three. Here's the more detailed definition for you guys. I thought I'd definitely do the simple one first. It makes more sense. So you got here, the NFP is a statistic researched, recorded, and reported by the US Bureau of Labor Statistics, intended to represent the total number of paid US workers of any business, excluding the following employees. So here we have government employees, private household employees, non-profit organizations, and then you go farm employees. Okay. This monthly report also includes estimates on the average work week and the average weekly earnings of all non-farm employees. So it's quite a detailed report, and I'm going to go into more detail about that and why it's so important. Why is there such enormous emphasis on the payroll data? Two main reasons why. I mean, the first is timing. So usually released the first Friday of the month, capturing employment conditions of the prior month. So obviously July's non-farm payroll report is going to come out as June's, and August, on Friday the 2nd of August, that's going to be July's NFP data. And majority of the time it falls on the first Friday of every month, but every now and then it does fall on the second Friday of every month. But 95% of the time, the first Friday of every month. In this case, this Friday, 2nd of August. And it's comprehensive. The report is very comprehensive indeed, providing significant industry-specific detail regarding payrolls, hours worked, and earnings. The data serves as inputs into key macroeconomic data. The significance of the NFP is displayed in the data which it produces. A number of key macroeconomic aspects can be derived from the NFP report. This is why it's so important. Now let's have a look at these different aspects here. So here we have personal income, in particular wages and salaries. The largest component of the personal income are derived from the earnings data from the establishment survey. Then we have the another IP, industrial production. Production worker hours account for nearly half of the input to the monthly IP report. Productivity. Hours worked serve as the denominator in the productivity equation. Productivity equals output divided by hours. Then lastly, we have unit labor costs. Earnings serve as the basis for computing compensation costs. So, I mean, the non-farm payroll report doesn't just necessarily measure the number of employed individuals, but all these different aspects of macroeconomic data which are so important. Possible outcomes. Some of you may or may not know that obviously there is a usual effect with non-farm payroll reports, along with all the other fundamental announcements that come out during the financial calendar month. But let's just take a usual impact or usual effect of the markets for the non-farm payroll. Possible outcomes here. You can see I have a key, a greater than, and a less than key. So let's do the first one here. If actual is greater than forecasted, good for currency. What does that mean? If the actual result is greater or higher than the predicted result, it will be good for the dollar, good for the currency. Example, let's say the predicted outcome is 250,000 and the actual is 280,000. It will result in a positive move for the dollar. Why? Because actual is greater than forecasted. You can see a 30,000 increase. On the other hand, you might see a negative move for the dollar if the case is the opposite. If actual is less than forecasted, bad for currency. So for example, if the real result that comes out, the real figures, the final figures, is less than expected, bad for the dollar. So let's say again the forecasted figure is 250,000 and the actual result comes in at 150,000 less at 100,000. It's going to be negative for the US dollar. So in a situation like this, you're obviously going to sell the dollar because the dollar is going to weaken. Pretty straightforward. Why do traders care about the NFP as opposed to all the other fundamentals that occur? First of all, job creation is an important leading indicator of consumer spending, and this accounts for a majority of overall economic activity. So there you go, you have it right there in one sentence. It's very, very important, a strong indicator of economic health, and this is why a lot of traders care about it. Also here you have, it's a US fundamental, and the US is the biggest economy in the world. The US dollar is the most powerful currency on the market in the world. And anything affects the dollar, people want to know, and it's going to move the markets. The non-farm payroll report also affects price movements of many trading instruments other than the US dollar. So for example, the other majors, the euro, the pound, the Japanese yen, the Swiss franc, the Canadian dollar, and so forth. I can go on. Also, currency commodities like gold, silver, even crude oil can be affected by the non-farm payroll report. So it has a bit of a ripple effect, not just only the majors, but a few other trading instruments as well. And again, occurs only once a month, so it's pretty rare, and it's full of anticipation, and that's why people look forward to it. Here's last month's results. So we're looking at the June NFP result, which caused major movement for the USD JPY, the US dollar Japanese yen currency pairing. As you can see, this was June's release, which was May's data figures. And you can see a clear bullish trend here. You can see the dollar actually resulted in an upward channel, upward trend as a result of the positive data. So it just gives you a bit of an indication of the impact that the NFP can have on the market. On the other side of the coin, exactly the same. June non-farm payroll last month. This is the effect it had on gold. As you can see here, there's a clear bearish move over here, a downtrend that gold experienced. Gold weakened as a result of a positive outcome for the US dollar. Now, not many of you would know this, but gold has an inverse relationship with the US dollar. So when the dollar strengthens, gold weakens, and vice versa. Okay, so if I go back one, you'll see here, positive result for the dollar strengthens. At the same time, gold took a hit and dived. So what I'm trying to tell you is that it's pretty easy to trade something like gold or silver, both currency commodities, during a non-farm payroll because they have the inverse relationship with the US dollar. Okay, what we're looking at here is previous non-farm payroll results. I've got a few here. One is a bit older than the other. I've got one from June 2013, and here's the actual, and here's the outcome. And again for December, the 7th of December 2012, so 6 months ago, I recorded the details for you as well. So here you can actually see the actual result for June for last month's non-farm payroll was a lot higher than expected. Okay, it was a good result, and let's see what happened on the market. Okay, beautiful uptrend here, dollar yen 30-minute chart, and what I've done here is I've actually circled the effect it had on the market, the impact. So you can see here, I mean, look at that beautiful uptrend here, clear example of how powerful the non-farm payroll report can actually be on the market. And what's important for you guys to know as traders is that, you're not seeing one candlestick spike to a ridiculous high or a ridiculous low. You're seeing a gradual increase from one candlestick to the other. And you're looking at a 30-minute chart here, so it's telling you that for 2 hours you have seen a clear uptrend as a result of the non-farm payroll report. And in red at the bottom, what I've done is I've highlighted the actual time it came out, which is exactly the release of the non-farm payroll report, just to prove that this bullish move was a result of the NFP release. If we go back to the previous NFP results, I'm now going to show you the effect that December's non-farm payroll report had on the markets. Actual results a lot higher than forecasted, so let's see the movement it had with the dollar yen. Here we go. A bit of a different situation this time around. You can see a clear spike here. It was such a good result. It spiked up hundreds of pips. And sometimes during extreme volatility, where liquidity is very thin, you might struggle as a trader to actually get into the position or get out when there's such a huge spike in the market. That's why the other one was better, when you saw a gradual increase with the different candlesticks. In this case, it was a huge spike within this time frame. Okay. Shortly after the release, about half an hour later, you saw the market start to correct itself and it came back down again. Now, this is a perfect example of a rebound. So as a trader, you could get into a buy position prior to the release of the Non-Farm Payroll Report. Once it's spiked and started to drop back down to normal levels, when you see the red candlestick starting to form, that might be an indication to open up a sell position back down, because usually with such big spikes in the market, it's never going to stay there for too long. It's never going to stay there. There's always going to be a correction or a rebound that takes place. So always keep this in mind. This is a perfect example. Again, you can see in red here, the red box at the bottom. You can see that exactly at 2:30 on the 7th of December 2012, when the non-farm payroll was released, this was the movement caused. A lot of volatility. Here I have a chart which displays the stats of initial claims or jobless claims and non-farm payroll reports. And if you notice, you'll notice that the NFP figures tend to move sharply in comparison to weekly jobless numbers. So the unemployment figures every week. So you can actually keep track of potential non-farm estimates and outcomes if you look at the jobless claims or unemployment claims that come out every week. Very interesting. Approaches used to forecast payrolls. Okay, obviously there's a number of different approaches that economists and analysts will use to come out with the actual figures, and here they are. Model-based approach. Recession models, using initial unemployment claims, ISM employment indices as independent variables. Okay, the other one is naive or adaptive approach. So typically based on the extension of recent trends, looking at the likes of moving averages, or other indicators that might help you identify potential trends in the market, RSIs, Bollinger Bands, Elliott Waves, anything that helps you identify the trends. And thirdly, judgmental, combines model-based adaptive, weather considerations, and a variety of other factors in developing a payroll forecast. So clearly you can see there's quite a number of different approaches that people will use to predict or produce an estimate for the non-farm payroll release. Evolution of market expectations. So this is basically the build-up to the non-farm payroll report and how it actually goes about the action or activity that takes place before the actual surfacing of the results. So estimates or forecasts of the next payroll release begin to surface about 2 weeks prior to the report. Estimates tend to be revised based on incoming data, including the Thursday release of unemployment claims, which is the jobless claims that I've told you about in that graph. Estimates are further revised by the employment indexes from the ISM manufacturing and the non-manufacturing reports. So other fundamental announcements also come into play that can affect the forecasted figure of the non-farm payroll release. Obviously on Wednesdays, 2 days before the non-farm payroll release, you have the ADP employment report. Often sets the tone for Friday's announcement, and depending on this result, you might either reaffirm market estimates or reshape them. So really it depends on this, and tomorrow it's coming out, and that'll be a good indication of what we can expect for Friday's result. Here I have a little graph. I thought that will be interesting to show you guys. I'm not going to spend too much time on it, but you can see how often weather-related swings account for forecasting errors. So basically how difficult it is to predict accurately the outcome of the non-farms when you take weather into account. So you can see the different forecasts here, negatives and positives based on the conditions. So you can see just below 200,000, you've got a forecast here, 98, weather-related weakness in construction. On top of that, you've got just under 200,000, spike in SMR weather index. And just above the 200,000 mark, you have rebound following several months of weather-related weakness. So it just shows you that certain external factors can affect predicting or forecasting of non-farm payroll estimates. Where to find non-farm payroll predictions? I always tell my traders to always do a bit of homework before the non-farm payroll comes out. Of course, you can wait till the announcement before you open a trade, but why not see what the analysts and what economists are saying around the world in the leading financial institutions and get into the market before it comes out. So here's a few websites that I kind of put down here. MarketWatch.com, Bloomberg.com, Wall Street Journal, and FX Street. There's a number of different websites that I would recommend, but these are the main four. So, just jot these down, make a note of them, and definitely use them going forward. Usually, the Non-Farm Payroll Report is highly talked about, and you'll find that they talk about it all morning. Usually, there's a video, they do it live. So you'll be able to find a lot of information. And also, if they do decide to change the estimate last minute, it's very good for you guys to catch up and make sure that you're updated with any changes. How accurate are non-farm payroll expectations? As you know, nothing is guaranteed in the financial markets. Financial sites usually provide accurate data. However, the actual outcome is obviously unknown until the release. Okay, you always have to keep that in mind before getting into the market. Bloomberg might say A and the market might say B. So always just make sure that you've done your due diligence on the market, you've looked, you've done your homework, you see what the estimates are. And what can help you get into the position before that, this is actually a tip that I want you guys to take note of, is definitely, look at the US fundamentals for the week that have come out that are positive, and this usually sets the tone for the non-farm payroll. For example, if manufacturing figures were approved, or if they were better than expected, and if there were no disappointing data, so let's say if retail sales was up, unemployment levels were lower than last month, those are good indications that the economy is improving in the US. And obviously, heading into the non-farm payroll report, things will be looking good, and you could almost make a calculated trade to that the NFP is going to be a positive result. What to trade during non-farm payroll announcements? Okay, obviously we have so many different instruments, but the ones that I would like you guys to probably focus on, or I recommend, would be any dollar-related major pairs. So here I've got the dollar-yen here, I've got euro-dollar, and the pound-dollar, also known as cable. These are probably the main three, the most popular traded currency pairs during the NFP, and you're guaranteed to see some movement when the announcement comes out. So for example, always make sure you're looking at the base currency. So in this case with the dollar-yen, the base currency is the dollar and the yen is the counter currency. So obviously if it's a good result, you're going to buy the dollar-yen. If it's a good result with the euro-dollar, you're going to sell the euro-dollar. Okay, because the dollar is the second currency here, so obviously the euro is going to weaken, etc. and so forth. Okay, so if it's a negative result, you're going to open up a sell USD JPY. And don't forget, guys, the non-farm payroll announcement doesn't last forever, but it does usually create volatility that lasts longer than, let's say, unemployment claims or retail sales or anything like that. So the non-farm payroll can actually create a lot of volatility for a number of hours after the release. Currency commodities that I mentioned earlier, I want you to focus on is obviously gold and silver. Like I said, these metals have an inverse relationship with the US dollar. So when the dollar strengthens, gold will weaken. And if you have a look at a silver chart, you'll notice that the silver patterns are very similar to that of gold, and therefore it would be very easy for you to trade both. If you wanted to trade any indices, S&P 500 and the Dow Jones, which are linked to the dollar. So if it's a good result for the dollar, the Dow Jones is going to go up, and so forth with S&P 500. If it's negative, you're probably going to see a bit of a downward movement. So these are the instruments that I recommend you guys keep an eye on. Obviously, for you local South African traders, I know how you love to stay close to home and trade the dollar ZAR. Bear in mind the spreads are pretty wide, but you can actually expect some movement with the dollar ZAR as well with the NFP. You can expect some movement. All right, guys. Obviously, I want you to keep an eye on the economic calendar, because in the actual column, you can see you've got 3 columns here. This is our economic calendar on our website. If you just click on, you go to our website, forex.trade24.com, click on Research tab, and you'll find our economic calendar there. And what I want you to obviously do is use your time frames here. The most important thing is you change your time zone. You adjust it to GMT +2 Harare Pretoria time. There's no point in you looking at GMT -5 and being in a completely different time zone. It's going to be of no benefit to you whatsoever. So I've got it fixed here. This is local time. So on August the 2nd, the non-farm payroll will be released at 2:30 in the afternoon. Again, SA time. And I've turned daylight savings off because it is off in South Africa. So just make sure you adjust your settings to exactly what you have in front of you here. And we can look here. We have a forecasted result, an estimate of 185,000 employed. That's a 10,000 decrease from last month. But the actual result is what you need to be looking at. And 5 minutes before, probably about 25 minutes past 2, you're going to see a little refresh button that pops up in the actual column there. Just click on, keep on clicking the refresh button to make sure that you're updated if it comes out a few minutes early. But please keep in mind that it does not update automatically on its own. If you don't click the refresh button, you will not see the update and you'll miss the opportunity. Okay, as you can see, it comes out exactly the same time as the unemployment figures. All right, guys, thank you very much for attending this very brief webinar. Like I said, no time for question and answers, but what we're actually going to do is we're going to make a lot of these small webinars. I believe it's a bit more effective and concise if you keep them small and short and sweet. My next non-farm payroll webinar will actually be on a strategy on how to actually trade the non-farm payroll. But what the most important thing I wanted to do was make sure that everyone is aware of the impact and how important the non-farm payroll can be and the opportunity that it provides a trader within the market. Like I said, any questions you guys might have, please don't hesitate to contact your account managers tonight, tomorrow, the next day, and we can take it from there. Please don't forget that we have a special NFP bonus this month as well, this week. Anything above 10,000 Rand, you get a 20% bonus. Anything under 10,000 Rand to 5,000 is 50. Anything under 5,000 is a 5% bonus. Any other questions, guys? Just like I said, contact your account managers, and thank you very much for attending. I will see you all next week.